Good morning, everyone. Welcome to Admiral Markets. Thanks for being here and joining us with this trading room. We're going to take a look at Forex market and technical analysis right here in this live webinar. Take a look at what's happening with our currency pairs and the charts. First of all, though, we have to make you aware that this webinar is being held for a global audience. Please take into consideration that the information in this session may not be suitable for everyone. To get the corresponding information on charting, conditions, and any other detail, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. This webinar is for educational and informational purposes only. By continuing watching this webinar, you agree that the risks involved are yours and you agree with this disclaimer mentioning all the details. Please also visit Admiral Markets' website for further information as well. All right, thank you as always for that attention. So today we're going to take a look at technical analysis. We'll be using fibs, trend lines, moving averages, pivot points to determine the trend, take a look at what the opportunity could be for today's market, in my opinion, and look if there are any things that could stop a potential trade from materializing, such as filters. Then see what could be the trigger, where, at what point, and when could it be interesting maybe to look for something, and then how would I enter. So that's the things we're going to take a look at today. With that said, don't forget to take a look at our markets and social media, and we can take a look at the calendar quickly together. There it is. We had an odd employment change that was positive. It really was very positive, 121 compared to 112. That was obviously a biggie. The Kiwi, as far as I saw from price action, must have been staying the same as 3.5, but let me check actually. Stayed at 3.5, and as expected, that was expected that it would stay 3.5. 3.25 was almost impossible because they just increased it a month ago or very recently ago, so that was not likely. 3.5 was expected. 3.5, if 3.5 was given, it would have. There was a bearish expectation because of that. 3.75 would have probably been bullish, and that's what happened. And if we look at price here on the Kiwi fell after the release of the interest rate. Not a whole bunch, but still some 40-45 pips as reasonably one could expect with that particular rate decision. So anyhow, with that behind us, let's take a look what we can expect today. Let me use a fresh template here. Today's webinar is moving average trading, so actually let me use a different template, the moving average template here. Both have moving averages on the chart. We have basically two templates. One is using 21 EMA close and a 34 EMA close. The other is using 21 EMA close high and low, which is called a band or D-band, and an 89 EMA close. If you're new in here, please let me know because then I can explain further. Otherwise, I assume that you're aware of these concepts. We also have an awesome oscillator, a special indicator at the bottom there, and we also have fractals, pivot points, Camarilla, candlestick patterns on the 4-hour chart, and of course we'll be adding fibs and trend lines manually. So that's what the weapons of tactics that we're going to be using for most likely for this webinar. Maybe we'll add still some things, but that probably will be it. So if you have any questions regarding tools or indicators or approaches, please don't hesitate to ask me, and I will give you more info on that. All right. So hope you're doing fine. By the way, just let me know how you're doing. If how the trading is going this week. Hope that that you had some trades this week. For myself, not that great. I took a euro dollar short, which was good here, for instance, but overall not fantastic. This euro dollar, I mean, didn't go anywhere basically except that fall. After that, it was just oscillating back and forth. From a moving average point of view, we do have a break below the 21 band yesterday here. So that could be a potential short. I'm not in that short as yet, but it's something to consider that there is a breakout back to the downside. One of the risks I would think of taking a trade to the downside at the moment is just the fact that we could see one more retracement up to 130, which is the weekly pivot point, as well as a psychological number, as well as the R2, and as well as a 38.2 fib. No, 50 fib. Depends how you fib it. If you use this swing high, swing low, it is a 38.2 fib. If you use this one, it is a 50. So obviously we talked about the $0 the last two sessions, and it was always the same story basically. Wait for a breakout or wait for a retrace higher. That hasn't really changed. Actually, well, one thing changed is that we had the breakout, but the breakout hasn't gone anywhere. So maybe the chances of price going all the way back here are not that likely as yesterday or Tuesday. That danger still lingers, though. If it does get there, it's still a good short. Chances maybe not that high that it gets there, and because we already had this breakout here. But of course, it is a strategy setup. It's not an ironclad guarantee. Nothing is in Forex that it will move lower. However, that is the idea of the strategy setup, that this is a breakout to the downside. 50-minute world, a lot of back and forth here. If you don't want to take the hourly setup and rather wait for a bit more confirmation, then one way of trading it is waiting for the break of the L3 and the fractal near the L3 for a short there. Stop loss on the hourly would have to be above the top here at least. If a trader could even opt for a more looser stop loss above the 130, right? Those are options. If trading the 15-minute world, stop loss could be above here. That's loose, and above H3 is tight, I would say. 4-hour chart. We actually had a breakout as well, because you see this candle was, if I take away this line, you see that this candle here engulfed the previous one, 4-hour engulfing twins at the moving averages. So both the hourly and the 4-hour are showing breakout trades to the downside. So there are good reasons to short it. Is it a guarantee that price will not retrace up? No, but there are significant things in its advantage to think about short. And so we talked about the 4-hour stop loss would definitely have to be above the same thing, definitely above this high here, obviously, but this high here, definitely above that from a 4-hour perspective. Stop loss, target, main target 127.80-ish, minus 272 target. That's the main target. From a daily perspective, nothing much to add here. Price is pretty far away from the moving averages, so there's really no moving average trade, because not on this daily chart. Price is already far away from, has broken away from it. So there's really not much to add besides the things that I mentioned. I hope, is it clear? I hope. If not, let me know. Let's take a look at pound dollar. Pound dollar on the hourly has been retracing higher, so we don't have the moving averages aligned. We have a bullish band We have a flat 89. We're above the daily. If anything, it could even be more of a bullish structure at the moment. But obviously we know that the 4-hour is bearish. Prices retrace back to the band. So from a 4-hour perspective, what the moving averages are looking for is actually for price to break below and post a close below the bottom of the 21 band. A close below this level. If it doesn't do that, it's in retracement mode from a 4-hour perspective. So that's what the moving average setup would be waiting for. From an hourly perspective, that's the same level as a daily pivot point, as we can see. That's the same level as the hourly band. So 161.50, 161.60, important level here. It's also the top, the broken top here that could become support. So that's important level for bearish setups. Until then, this could be tracing up. This could retrace up for a bit. How much though? Well, let's put a fib to find out how far it could retrace. And we see that the 38.2 fib would be a very natural level to think about, 162.80. Would roughly close the gap as well. 50 fib, I would say, is probably, the max at 163.50. So this is what we can think about in identifying turnaround spots. That 38.2 fib is equal to the daily R1. So price could go up to hit that 38.2 fib. So if we then look at the 50-minute chart, we see that price is above the band, retrace back to the band, is now breaking above it. So from a 15-more point of view, if we zoom in a lot more, you can see actually that price closed here with a breakout candle 13 minutes ago, exactly when we started the webinar. So from a 15-minute point of view, there's actually some kind of triangle being broken to the upside. That previous candle was actually the moment where we closed above it and above the fractals here, these two fractals. That could have been an entry on a 50-minute point of view. It's a counter trend trade on a 4-hour. The target would have to be that 162.80 because that's where we expect the resistance. So 162.80 and the entry here is at 162.08, but it's still about, although it's a retracement trade, it's still about 70 pips space to the upside. Of course, because it's a retracement trade, price could go very choppy, price could go very slow. Price could make false breaks, especially I have to specifically warn about the pound and the euro, trading it so early in the trading day. Technically, I'm talking about strategy rules, then they qualify. From a discretionary point of view, although the rules make sense still, we do have other factors to think about in the sense that the currency characteristics of the pound and euro dollar are a bit different around this time than maybe after an hour from now or 1.5 hours from now. Although I don't think we have a pound news. Actually, I forgot to look with you. We did look at the calendar. It's just that I didn't look at today's events. We got Bank of England governor speaking, but that's in the afternoon, in fact, the London afternoon. Otherwise, we just have a wide scale of European, mostly European news events. Okay, so this is something. Therefore, I have some significant doubts about taking breakouts that early. But in theory, this would be how it looks like on a lower time frame, capitalizing on a 1-hour trend. Oh, thanks, Bob and Edith. Yes, you're right. I was, of course, changed it indeed to look at the Kiwi. Thanks for that heads up. We got ECB monthly report. We got some CPIs coming in. We have Greek unemployment rate. Yeah, we have nothing, just some light medium news there, nothing very special. But this is how you can use basically moving averages on various time frames to identify space. We added a fib just to give a bit more structure to it, but that's all. To identify space. I mean, here on the 50-minute world, we're trading with the trend. On the 4-hour, it's a retracement, and but it could be basically a moment where price breaks away, back, and from the moving averages, and that 50-minute move like that is basically where price is retracing back to the 89 EMA on the 4-hour, and on the hourly is basically at a, let's say, a hot spot where prices, where the band is approaching the 89 EMA. Those are always difficult spots because it's a decision spot. It's often good to keep an eye on it because sometimes you get a bigger move down or up. Let's see, the hourly candle does look pretty strong. It does look like engulfing twins. Does look like a pretty good spike up. So it could be a decent long position based on the hourly as well, which supports the 15. But you know, every trade has its risks. It's a bit contradictory, obviously, because the euro dollar is bearish in its outlook on the hourly 4-hour. The pound dollar is bearish, yet potentially retracing to the upside. So they don't really match. Usually they're a bit more correlated, but obviously the euro pound has its own movement as well. And if we look at the euro pound, then we see a big downtrend, but a recent consolidation, which has been really looking funky so far, as it looking like an expanding wedge, and most recently just making a lot of spikes up and down. Most recently just falling quite a lot to the downside. So it looks like the euro is indeed losing ground against the pound, which would explain the euro bearishness, but pound rebound potential against the dollar. The Aussie hit a interesting resistance level. Let me clean this template here. Take it from the scratch. What we're looking at basically is now the Aussie is becoming interesting because what we're looking at here is a break of a consolidation zone that lasted 5 months. To be specific, these levels. We had a candle close right here that was below that level. We had a bit of a wick, but it's not I wouldn't consider this a massive pin bar. Yes, a bit of a wick, but not something that I would say endangers the downside break necessarily. So that's good to go. What we can do then is put a fib from top to bottom to fib the breakout, zoom into the 4-hour chart, and what we can look for is basically a hook back to the 38.2 fib, a hook back to the broken bottom. Often enough that becomes resistance. We're seeing some bounce off that level on the hourly chart. You see spike up facing a lot of resistance at the daily R1 and weekly S2. That was an Asian trade. So if you were trading Asian session, you might, we're considering maybe a short in this zone. On a 50-minute chart, there was really no price action signal indicating that, though. There was no confirmation of a move down, except maybe this candle, but that looks like an inset candle, maybe Harami. Nothing spectacular to indicate that, but there was a bit of a wick. Now, from a price action point of view, no confirmation that price would suddenly turn in this zone. So if you look for price confirmation, there's really no signal here. But if a trader were to take a bit more of a aggressive entry right at when price moves up, then it would be a pretty good trade. I didn't trade it. It was a few hours ago, and I was still sleeping. So that was a good bounce. Now, will we get follow through? Will the price continue lower? Because that's something we really never know. It could still retrace higher. Price, you know how price makes ups and downs like crazy. It could do something like this. You really never know, actually, of course, logically. So what are the chances of a follow through? We got a daily pivot point that's holding it up. From a moving average point of view, we had the price moving back above the band, and I think we just actually closed below it, just barely, which could be considered a breakout candle, in fact. So here too, bearishness on the AUD USD. We have to be careful with that pound dollar idea because it looks like dollar strength more than dollar weakness at the moment. If you look at the Euro and Aussie, and if we look at the 15-minute chart, we can see the downside not really ready as yet, in my opinion. It's still above the L3. It's in the middle of the zone. So I would like to see, I wouldn't take any shorts as yet. It's probably a bit of a bouncing spot area here. I would rather probably look for a break of this new fractal that is going to probably post very soon, right in here. Right here. So I'd probably rather wait for a break of this one for a bit more confirmation that we are indeed breaking, let's say, this trend line for a follow through on the Aussie to the downside like this. All right, so that's what I would, although the hourly indeed just posted a close below it, it was of course marginal, it was just a few pips. From a discretionary point of view, it could easily be, you know, it's quite a toss-up. So to get more confirmation, it could be wise to wait for a break of the candle low, last hour's low basically. 4-hour point of view, you see a big wick on the 4 hours, so it's basically also looking at a kind of like a shooting star that hit the 21 band on the 4-hour chart. So there's another confluence of bearishness. This shooting star at the band, at the resistance 38.2, at the broken support. A short based on that candle alone is possible, and maybe some of you took that with a stop loss, I would say above the candle high. Maybe one could even go about 12 pips above that candle high, which would be a bit more conservative stop loss. A stop loss a couple of pips above that candle high is a bit more aggressive stop loss in my opinion. If you're not in that short, if you still like the shooting star at the moving averages, from a 4-hour point of view, it's only about 15 pips away from that close price, which is not too much. Let's take a look at the target, which would be 90.30, which is about 130 pips. Stop loss using a conservative stop loss is currently 63 versus 130, so it's about 2-to-1 trade still. So that should be still very good, in fact. So daily chart is a mess. There's nothing really, I mean, from a moving average point of view, so it's primarily 4-hour and hourly that look interesting here. And 15 could be a breakout. Alrighty, so Bob is asking about pound odd. Let's take a look at that. Indeed, pound odd is a funny thing at the moment because, let me renew this template as well. The funny thing about it is the fact that we broke a big bear flag here. That bear flag break started slow, accelerated eventually with a recent fall that we can see in here, specifically on the 1-hour chart, which was a very nice fall. On the 4-hour chart here, it looks like this. This is the 4-hour break here, and you can see that 4-hour breakout of the daily bear flag gave us some nice potential trades. We had one here, we had one here, we had one actually here, of course, we had one here, we had one here from a 4-hour perspective. And on an hourly perspective, we had even some scale-ins potentials in that blue zone right in there. Anyhow, from a daily perspective, you can see here the bigger break moving to targets, for instance, like this, hitting the minus 272 target of this fall where we went back to the 38.2 fib and fell. What's going on now? Because we're making a pretty aggressive upside. Let's zoom in. Looking at the AO, which was pretty strong, very strong in this fall, I would still be inclined to put a fib on that very fall. And we hit the 78.6 fib, which is a pretty deep fib already, and we're moving up again. Personally, I would expect this to be retracement bounce level, which it did, but now it's moving up again, so in an impulsive way. So that's a bit confusing because I would have expected some bearish momentum follow through, which is not happening. So I'm in a wait and hold mode at the moment. I really don't like the upside. There's limited potential in my opinion with an 886 fib, a double top at 78.6 fib, and a double top here, a bigger double top at the daily R2. So I don't like that upside, especially considering the strong 4-hour downside. In the meantime, we're getting a strong upside as well, but doesn't mean I want to go long right now. And so I'm still bearish, but currently, because I didn't take this trade here at that time, I'm flat and waiting for signals before taking a short. From a 15 point of view, one of those signals could be, for instance, to trade it below these bottoms here, for instance, as a breakout. That could be one way. The other way could be for some price action signals, obviously, on the hourly or 4-hour or even daily, which we didn't have yet because we have strong daily candles. So if someone took the 78.6 short and put the stop loss all the way above the top, I would be seriously thinking about my options at the moment. I mean, one way is showing patience and leaving it at the top. The other way is being a bit more aggressive and trying to counteract against this impulse to the upside by placing probably the stop loss just a couple of pips maybe above this top. So one is then reducing the risk from, if someone took it at, let's say, 177 with the stop loss above here at 178.63, which is about 160 pips. Not many traders would do that. But you reduce it from 160 to about 30-ish, which is roughly about 20% left of the original risk, which is obviously a small loss. That would be seriously something I would consider. Or even move it even tighter, maybe to 177.20, which basically reduces it to about 1/8, which is about 12%. A more aggressive trader could even take a short right in here and anticipate a double top, but that's a very aggressive move. It's less likely to succeed, so you really need to capitalize on a high R2R to justify that kind of aggressive short against pretty impulsive bullish 1-hour action in a pretty impressive 1-hour bullish run up. So that's not something that I would do myself at the moment. From a daily point of view, we're back at the 21 band. So when your daily candle closes below the 21 band, below if it closes below 176.45, that would be a daily breakout again, all right? Just like it did here, for instance, with that candle. So that's something on the daily. 4-hour, we would need to break below, close below 175.10, etc. Here we don't have any bearishness. We don't have any bearish, actually, alignment. We have bearish alignment on daily. 4-hour, and on 1 hour we have bullish alignment. That's the funny thing about it. And we actually have a bullish breakout to the upside that closed 15 minutes ago, right? Because of the fact that prices above the moving averages moved back to it and closed above it. But from multiple time frame analysis, I would skip this bullish breakout to the upside because of the fact that, in my opinion, we're running into bigger resistance. From a 15-minute point of view, we have action H3 just a bit higher. So too much of a mix almost in this case. Euro odd, more of a mix because it actually broke this top. Despite the fascinating downside, it kind of pushed through it. Now the difference here is that daily has a big wick. Look at that. So that's a bit of a difference with the pound odd, and that's of course explained by the fact that the euro odd is the euro pound is moving down. So that could be a price action signal that some traders would like because it's, first of all, a big shooting star. Second of all, it happens at the 21 band, so it could be an interesting signal. If we use maybe this fib, some confluence there. The other way is waiting for a bit more confirmation. The other way would be to wait for a close below the 21 band and below yesterday's low, basically. Although we did, from an intraday perspective, pushed through the daily low. We didn't close as yet, obviously, today below it. So a more aggressive move would be shorting it now, based on the shooting star, stop loss above or 12 pips above yesterday's high, or wait for daily close below yesterday's low and 21 bottom of the band. That's how one could approach the daily chart. From a 4-hour point of view, we need to close below, indeed, yesterday's low, for instance. We need to break actually a bit lower than yesterday's low. We need to break below 140 and to close below 140. So we can mark this as the zone to keep an eye on. From a 1-hour point of view, we are in a bullish mode. And actually, there could be a breakout trade if a close happens above the daily pivot point and well above resistance. So from a 1-hour point of view, we have a breakout here. From a 4-hour point of view, we have a breakout here. From a daily, we have a breakout here. So it's definitely a decision spot. It's definitely in a bounce or break spot. Let me say it this way. It's a talking spot. Another way of saying it, 50-minute chart, H3 just above that 1-hour important level. Now, just like the pound odd, have some doubts about the upside break due to the bigger overall market structure, but and the daily shooting star here. Dollar yen just keeps breaking and breaking. From a daily point of view, we have already strong candles. We have entire candles above this broken monthly resistance, this broken monthly top dating back to beginning of this year. So it's definitely looking like a sustainable, good breakout. So what does that mean? Well, one thing we could do, of course, as traders, is wait for retracement. We can fib the entire move up here, a 38.2 fib or a 23.6 here in this zone. That could be a hook back zone for more upside, right? If price touches the 38.2, it will probably hit the 21 band, for instance. Now, we don't know if this upside is finished as yet. It might be still going on. And the 4-hour chart here, you can see various moments where we had possibilities to join that breakout to the upside. Now, this one would have been not so good actually, but the rest looking pretty decent. We are still away, pretty decent amount away from the 21 band on the 4-hour as well. So zooming into the hourly, we see that we're getting another bounce here. So it's difficult to tell how far this can push up before it makes some kind of retracement. That it will make a retracement eventually does seem a decent probability, but there could be one more shoot up to 107.50-ish before it makes that retracement. This is difficult to see. One thing that we would probably need to see break is this kind of like rising wedge formation here that is happening. So to the upside, I mean break to the upside, that's one way, or downside. So to break to the upside, obviously price is accelerating within the uptrend. 107.50 is the target. If price breaks below this rising wedge, we could see price fall back to the broken top. We could see price fall back to the weekly pivot point and make some kind of retracement on the 1-hour chart. Downtrend on the hourly. But still see a bounce for more upside when it gets lower. 15 point of view, we have an H3 above basically here. So this fractal, 107, once it cracks 107, could be a breakout trade to 107.50. If we look at the H5 target, it's 106.70, which makes sense. 106.75 is a big minus 272 target. of the daily chart. So I said 107.50 because it's a bit more conservative. So that zone there, 107.50, 107.70, I would say, is the levels to think about. If we put fibs on, we can do that. Did you have a particular time frame in mind? Because from a daily point of view, 1 hour chart, okay. I'll just quickly show you the fib I meant with the 107.75. That's this, basically, this is the swing high, swing low, where we bounced off the 50 fib about 34 times. Let me zoom in. That fib, where we bounced off that level, has a minus 272 target at, oh, it's 108.10, 20. Interesting. Did I have it correct here? Huh. Oh, you see, I didn't have it correct. It's 107.80. It was just misplaced. Okay. Well, roughly 107.80ish is that zone. Okay, so that's the minus 272 target. Down to the hourly. What we want to fib on this chart is, let's see, well, we have multiple swing high, swing lows, looking at the AO. One way, let's start all the way from the bottom here. I think this is the bottom. Let me check. Oh, well, there was some upside before that, but okay, let me start from the very beginning quickly. That would take too long otherwise. Let me do the AO fibs otherwise. Right here, that's one of them. Looks like we just hit the minus 1,000 after hitting the minus 618 and after hitting the minus 272. So each time we hit that target here, right here, retraced, hit the target, retraced, hit the target. So we could be retracing now again, but let's see what the next target could be. For instance, indeed, minus 1272, minus 618, 107.50, 108, basically. Let's see if we can use different fibs. Here we see a shallow bounce, 23.6, just hit the minus 272 target. We know that there was a minus 1,000 target as well. Confluence at 107. Its minus 272 target is 107.60. Minus 618 target, excuse me. So that's the target that one could think of when breaking 107. From our hourly point of view, we had some breakout trades, as you can see here and here. That's how you can use moving averages to your advantage, right? Let's see if there's anything else. So we can talk about the Kiwi. It actually had a breakout trade on the 4-hour chart here. That one, breakout candle, but also here, not a few hours later. And that's been moving down nicely ever since that, right? So we also had one here, as you can see, and here. Not all of them doing great, but some of them not bad, and some of them pretty good, right? Those are breakout candles on this 4-hour chart to the downside after going back to the 21 band. So pretty useful, I think, for that. The 4-hour chart definitely giving some good signals here. The first one of this vertical lines was even a daily breakout candle, actually. Yeah. The hourly, let's take a look. Also pretty far from moving averages. There's nothing to trade here on the Kiwi, I think. The L5 has been hit. I wouldn't trade the Kiwi for the moment. Too far away from the moving averages. There's a potential for retracement, I would say. Dollar CAD. I don't consider this pair trending enough from the moving average point of view. The moving averages are too flat, too intertwined, so I wouldn't consider anything here at the moment. From a fib point of view, and from a trend line point of view, it looks like we're breaking out of a trend line and we have hooked back to a 50 fib and bounce. So it looks bullish from a fib point of view, but obviously not getting that confirmation as yet for moving averages. Dollar Swiss probably the same as all the other dollar pairs, bullish. Yeah, same story basically as the euro dollar and the dollar. It looks, and the odd USD it looks bearish on these pairs. And the only one that has a bit of a bullish hint of bullishness is the pound dollar, and it is now currently bouncing off that red line we had for about 16 pips, but let's see, it just started. So otherwise, let's move to a few non-dollar pairs like the pound yen. Very aggressive rebound up, quite funky price action, looks very strong like a V-Valley. Difficult to trade because of that, in my opinion. But if you look at price action, obviously very strong bullish candle. So some follow through on that, yes, that's possible. So we can take a look at the 15-minute chart and ride that daily power on the 15 and or try to at least. And one way of doing that could have been, for instance, this breakout here. Not doing too bad. H3 is a bit higher, so even the next breakout or the breakout after that could still pose as pretty good, decent potentials. H5 is all the way up at 175.50. So there's a lot of space here, but there's a lot of momentum. So pound yen is a difficult one to trade. Euro yen, same story basically. A lot of momentum on the daily chart, strong close near the high. So let's take a look at the 15-minute chart. See if we can ride that momentum. Double top on the 15 means that break above that and a break of H3 at the same time would be a breakout trade. Less distance between the H5, not as volatile as the pound yen, which pound yen almost maybe has too much movement in it at the moment. Euro New Zealand, same funkiness, a lot of ups and downs. It's not really easy to make a chart pattern out of it. I mean, obviously we have a line like this. We had a line like that, broke it, hooked back, broke again, hooked back. A lot of fast, quick changes in this pair. So I'm not really fond of it. The pound New Zealand, well, obviously it's getting close to tops, but bullish price action is basically the same here. Difficult read because of that. But if anything, I would still rather look for rejection. You know, it's tempting to trade with the momentum here, but in this case, just like the pound odd, I still think that price is moving to a rejection resistance zone. Rather look for 4-hour wick, for instance, that shows a pin bar or shows a shooting star than jumping into a momentum to the upside here. Obviously, price action is not confirming it as yet. So I would need to wait for that. But if it does, that could be worth considering, in my opinion. Anyone have any questions by any chance? Your CAD broke this channel. That could be interesting. It's below the pivots, and there's a break below the 21 band. You see that? So plus a break of that channel. Strong impulse to the downside. So your CAD is looking good for a break here too, just like the euro dollar. Looks like a good short, in my opinion. It's hooking back towards the daily weekly pivot point after breaking. It's going to be a hook back for more downside potentially. So looks like a good 38.2 fib. Targets could be the minus 618, 140 level. That's conservative. The more aggressive target could be this bigger bottom right in here at 139. If one doesn't like the short in here, you could even wait for the break of the bear flag after the break of the bear flag, of the bigger bear flag, so break of a smaller bear flag after the break of the bigger bear flag, which is this break. So that was the break of the bigger bear flag. Now we got a smaller bear flag, so that's another way of looking at it. So it would be trading the break of the continuation within this 4-hour downtrend, an hourly, 4 hours primarily, and daily. That would be another way of doing that. New Zealand yen, yeah, it looked like a good bouncing spot. I think we had a bit of a bounce yesterday where we were looking at it. I forgot exactly where. Let me take a look. I think price was here somewhere, if I remember correctly. So we got a bit of a bounce up to 88, but then getting a rejection. From a daily point of view, it's, or 4-hour here, maybe better. Yeah, the breakout is not doing all too well. That's for sure. Obviously, the fact that we broke out of this above this magenta lines here, like this, one would even expect a hook back like it happened here after the breakout at the blue dot, right? But the green bounce, as expected, that was good, but we got rejected a lot earlier than we should have, which is more looking like a reversal sign. So the breakout doesn't look too good, and if anyone took it, then I would rather be out of this trade personally. Although the uptrend could be still intact, I don't like the break, hook back, and failure to really move up. Let's see. Björn said that he took a scalp trade short, but I think they had too much stake up and down wild. Yeah, it's definitely a wild breakout. It's not a sustainable one. It's not a good one indeed. So great job though on the scalp to the downside. Great job. And from a swing trade breakout point of view, I wouldn't be looking for a long anymore indeed. We have a weekly pivot point. Fine, could be a bouncing spot still. One might even consider moving the stop loss just if someone is in that trade below that weekly pivot point, for instance. But otherwise, I wouldn't give it much room anymore. CAD yen, let's take a look. Again, let's start with the daily bullish daily candle. Look at that, towering above this this uptrend it was already in. Close literally at the high. No sell-off, no downside pressure at all. The high 97.71 to close 97.71 pip out of a 103 pip trade candle, or less than 1% basically. 4-hour chart acceleration recently of the uptrend. I'm not sure if we talked about this. No idea. Unfortunately, forgot if we did. But there are some nice pullbacks to the 21 band and breaks above them here, there, and even here, and continuation. So maybe here, but that was a close call. So doing pretty well. Now, obviously, you see that prices. You can see that price is far away from the moving averages on the daily and the 4-hour. So although the breakout could be strong, let's take a look at the hourly. We see a lot of momentum on the AO. What I'm looking for here is the AO because price is so far away from the 4-hour and daily moving averages, how much momentum is still there? That looks pretty strong. The strong AO confirming that I don't see any weakness as yet. With such a strong daily candle, I think we can look relatively safely, obviously within the limits of Forex trading. Nothing is safe, but within its limits, relatively safely, I think we can look for longs because it is at a strong position and strong uptrend. So if we look at the 1-hour, because the 4-hour and daily are not usable for moving averages because price is away from the moving averages, but on the hourly, prices are back to the moving averages. Price is at the moving averages. So I think if we get a close this hour above 97.44, in theory that would be already good. Preferably, I would like to see price actually break above last hour's high, at least with some wick, preferably with the close to make it engulfing, but some wick above it would be nice, 97.53. That would be, I think, a long signal on the hourly. Stop loss could be, it's tight, it's aggressive, but could be below the daily pivot point. Obviously, there's some risk by putting it that tight. What would be more conservative stop loss? Difficult, because the conservative stop loss doesn't have any natural level to think about. Maybe the 50-minute chart would help. Maybe the conservative one would have to be all the way here at below 97, 96, 97 or something like that, which is below the L4, below this consolidation on the 15 at least. Not as easy to pinpoint the level. On a 50-minute chart, what we're looking for basically, in my opinion, is either a break above the 50-minute top or a close above it, or if one wants to be patient, wait for a spike up, wait for a hook back, and take the next break. So in my humble opinion, looking good for a bullish breakout. Let's see. I don't know, is that what you were looking for, Judy, or were you looking for retracement maybe? Curious if you had anything specific that you were wondering about, or was it just more of a general thing? Just curious. 4-hour chart, we do have a bit of a bearish candle here. So regarding the timing of things, it could. Are you looking for a retracement on the 4-hour chart? Yeah, if you're looking for downside, I understand you kind of want to trade the back to the mean setup, back to the average idea or play, which at certain times certainly makes sense. Looking at the 1-hour AO and the momentum on the hourly, I have my doubts. It's not a guarantee, but it's one of the reasons why I would not look for it. Now, don't get me wrong, I could be totally wrong. This could fly down back to 97. Right, but I would not be really that excited about it. If the only thing that could happen is maybe indeed if price breaks below the L4. But if it's above the L4, I would not be really too excited about it. I would like to see the moving averages on the 15 at least bearishly aligned and price break below L4. After a bounce, So a lot of things would have to happen, and then still it's actually a retracement trade, which is going against a pretty strong 1-hour AO. So, but that would be what I would like to see before taking reversal trades. So that's my 2 cents. Let's see, XAG, for those that like it, it's still in a very tight consolidation here with a quadruple bottom basically, and kind of like a descending wedge type of formation here with the lows getting, the highs getting lower, the lows the same, and bearish, slow but sure and consistent bearish price action. Now approaching the 1860 bottom here, 1850, 1820 bottom. I wouldn't be surprised, to be honest, because it's so slow, to see a bit of a bounce still here and see one more lower high before we probably get a break to the downside. It looks too bearish really to expect any bullish revival. Obviously, if we break above the descending wedge to the upside and break above a top like this, it looks different, but till that happens, it looks more bearish, break, waiting for the break here for downside break. What kind of target could we have? This decade's low is at 1450, 1460. That was the low set February 2010. I don't know how important decade highs or lows are, but that could be a support level. It's also a bottom just in general. So that could be maybe the level, 15 psychological number. Maybe the break could go that far. Difficult to tell. It's difficult to imagine when it was at 50 that it would now be, thinking about 15, but it is happening. For some, that's not good. For some, traders unfortunately got a bit on the bullish side in this consolidation zone. Not that all bullishness was bad, but the retracement unfortunately went going deeper for those traders. XAU USD, less bullish, less bearish than the XAG, because if you compare relatively the swings, you can see that price went all the way past the 61.8 here on the XAG. XAU price kind of is at the 38.2 fib, so relatively silver falling a lot more than gold, so silver value versus gold value dropping over those last few corrective years, retracement years, and but anyhow, despite that, the same scenario lingers for the XAU. It's not as bearish, but it's still a consolidation zone after downside. Keeping an eye on these two lines, at the moment we broke this support trend line, so we're seeing some bearish break here at the moment, which could indicate the fall back to the bottom, and maybe we'll get a triple bottom again and move up again and then break. If we do break the 50 fib at 1100, it'll psychological 1000 level, could be bouncing spots. Dollar index is approaching resistance, by the way, right in here. Question is, I think there will be enough momentum to push through that resistance. Bigger question is how price will respond to this 89 level here, this top in here, in my opinion, because if it approaches that, it could still, in theory, be a wedge, A, B, C, and we can go down for D and then up for E. That chart pattern will be invalidated if price breaks through this level. That's why that level is pretty important. I don't see this level, obviously it's a resistance spot, but with the current momentum on the weekly chart, I do think eventually this level will break. It's my expectation, but one never knows. So expecting more dollar bullishness, but we could be at a pausing spot. Pound dollar not getting any follow-through. In fact, looked like that, but hooking back already, your dollar actually moving up instead of the pound dollar. That's funny. So there's a bit of retracement here. Very minor, obviously. If you look at the 4-hour chart, that retracement is only inching back to the 21 band, so nothing spectacular. But on a 50-minute chart, it looks very wild. Or not maybe wild, but looks bigger than it is. Excuse me, Aussie seems to be potentially pushing through and getting close to the 91.50 level. Well, I guess that covers most of the pairs, in fact. So I hope it makes sense. It's basically, you can use the 21 band as a way just to have an idea to see where price is in relationship to the band. If the price is at the band, it could be a bouncing spot. If it's away from the band, it could be a retracement spot. Take a look at the AO to find out if the retracement is possible. And if you don't have price at the band, you can look at various time frames to find a time frame level where it is in a potential bounce or break spot. So that's how one could kind of spot the pair and time frame that is in a position where you can use the idea. And of course, together with price action signals and fibs, you can piece together a few missing pieces of the puzzle that might be useful to review, like targets, for instance, or etc. All right, so me too, Bob. Appreciated that that you were here, and also everyone else, of course. And tonight, by the way, we have a webinar on admiral markets with Nenet. Hope to see you then. Let me take a look at the topic. It's learning classical technical analysis, or going through it, some angles. So I hope to see you then. And Sunday, by the way, I think it's Sunday. Yeah, premium webinar for account holders at Admiral Markets. So that could be very interesting for you. So thanks for joining. I hope to see you tonight, and have a great day. Cheers.